Welcome back, everybody, to the Titans of Today podcast. We have Steve Selengut, the writer of Retirement Money Secrets, a former wealth manager, and now a community builder and leader in the financial independence space, educating people about how to achieve financial independence and get into a state of retirement that you really can love and enjoy. Steve, welcome to the Titans of Today podcast.
Good to be with you, Jacob.
Excellent. So, to start us off and get a deeper understanding for the audience of yourself, your background, why don't you take us through a little bit of the journey of what got you to where you are today?
It's a long journey. I'm pretty old. I guess the investment management careers really started when I was 25, is when I first got handed actually a bunch of stock certificates and was told that these are mine now and that I should try as hard as I could not to lose it all, you know. And it was a significant sum of money back in 1970 when it happened. It was a whole portfolio of what were really Dow Jones type big board companies, well known, dividend paying, multinational companies, the cream of the crop, so to speak, that was in the Dow at that time. There weren't no NASDAQ companies and things like that in the Dow at that time. And you really had very limited resources, individual investor at that time. You had to go through a brokerage firm. Didn't have any computers or anything. It was all done over the telephone, and brokers had to write out tickets, buy and sell tickets, and take into a desk. And it was a wire operator that would send these things in. So it was compared to today, a very archaic operation. Even had stock certificates that just proved that you own them. You could trade these things yourselves by just like the title to an automobile. You could sign the back of a stock certificate and give it to somebody. Here, you want to buy my IBM? Sure, here it is. What happened was I got that. I was working in New York City, commuting New York from North Jersey for a major life insurance company and in their pension investment department. So I was fortunate. I had access to professional investment managers, and I could see inside the program that we had as employees at the time. So I had a lot of resources, and I had a broker who was willing to teach me how to look at securities in a different way than just saying, "Oh, that sounds like a good idea. That's hot. This is going up. We're going to go buy it because it's so popular," and stuff like that. Instead, she gave me an approach that was really look at the way it goes up and down over time with an upward trend, but it's, up and down. And there are corrections, which means the whole market goes down. And there are rallies when everything goes up. And these things are in limited volatility the rest of the time. And she said, this is true of every stock I've ever seen. And we were only looking at stocks when I was that age. I had nothing but equities. So in studying it, I came up with the idea, why don't we have all these? Some of them are at the highest they've ever been. Geez, let's just take our profits in those and look around and find others that are the same level of quality and income and so forth. And we'll get a list together. We'll build a universe, so to speak, similar quality things, and we'll sell the ones that go up and we'll buy the ones that are down lower because they've always in the past back up. So it was a contrarian approach to the normal Wall Street. Hey, come on, you got to buy this right now. It's at an all-time high. It's only going up. You got to get it or else it's going to be too late. We took the opposite approach and it worked really well. And within 9 years, I was making 5 times my employment salary. And I could say it's time to burn the three-piece suits, time to stop commuting. I'm going to do this for other people too.
Mm.
And that's the development story of what it was. And like I said, it was primarily stocks. When I started taking profits, I started moving it into tax-free municipal bonds, the individual bonds. My first one was a Fort Pierce, Florida, 4% coupon bond, which I held the entire 30 years for it to mature. But then we moved into unit trusts and Ginnie Mae's and preferred stocks and other types of income security. And I found that it was good to have between 30 and 40% of my portfolio in those income securities, in addition to the income paying stocks, because the income was more stable. And when the market did go down, I had that much more to take advantage of downturns and so on. So I was always an income focused investor. And then more recently, just before the dot-com bubble
Oh
at the
yeah.
turn
I
of this century,
was born in 96.
you were born in 96, so you were
Yep.
right there. Your
Yep.
parents probably were pulling their hair out, right? So right around then is when I started moving all of my stopping with the Ginnie Maes and all that stuff and moving it into these things called closed-end funds, which are there may have just started with ETFs at that time, but closed-end funds started in the early 1800s before mutual funds were developed, and they are really trust vehicles where the managers create a portfolio with certain guidelines and with certain objectives, and one of those objectives is to produce a lot of income. And for that side of the portfolio, they were perfect. And closed-end funds trade like stocks, so they were liquid. So you had this amazing transformation of having to go through all kinds of routines and procedures to just buy and sell normal bonds and municipal bonds and government securities. Instead, you could trade them just like stocks. So it was really a eureka moment. I was managing by that time probably $85 million for other people from the business I had started. So I was moving like $25 million out of Ginnie Maes and stuff like that into these closed-end funds. I didn't realize that at the time, but I had two closed-end funds that I was using because of their high dividends at year end. I was playing a game of buying them in September and selling them before the actual dividend got paid in December, so that I didn't have to hold them at a 5% yield or even a 2% yield for 11 months. Only hold them for a few minutes before they announced the future. But I never realized they were closed-end funds too.
Hmm.
But finally, coming out before the Great Recession, I started to discover the equity closed-end funds. It became so easier to own all the hotshot, high-tech type stocks and the ones that didn't pay dividends. I could now own them in the form of a trust that owned 250 different stocks, but it included all the big names, and it was paying 6, 7, 8%, even though they were paying no dividends at all. So it made a lot of sense to move that kind of money in. But finally, what got me to where I am now, which is totally closed-end funds, totally income focused, was after the Great Recession, when we came out of that, and that for some, I can't understand why they did it. They brought interest rates all the way down to zero.
Hmm.
Stock market went up like gangbusters. I used to only buy stocks that were down a certain amount from their 52-week high. There were so few of them that you had to figure if it's down now, you don't want to buy it anymore because everything is up. These 20 companies are down. There's got to be something wrong with them. So I changed my whole outlook and I started saying, okay, if I can trade stocks in a high income product, that's what I want to do. So I switched all my clients to closed-end funds and made them a lot of income. And then I sold the business in 2023 for an offer you couldn't refuse, one of those. And now I'm teaching people how to get to that income focused, income independence area where they can say, I don't care if the market goes up, down, sideways. I don't care what happens to interest rates. My income is growing every quarter, every year, and I'm happy. That's where I am. That's where I'm getting other people to be.
Hmm. And then if you look at the history that was laid out, what are some of the common principles or key points? You mentioned a few, right? The first taste of contrarian investing, then learning about income based. Each one of these is a different element that came into your life and that you steered towards, what made you gravitate towards those things more than others? Was it that stability? What kind of comes into my mind is like market mindset, where in some
Yeah,
cases, the market mindset, when people are very speculative and they're just trying to get fast gains and growth, there's a whole
I
avenue of life there, but versus what you're proposing and what you've done.
I started differently than most people. I started with that nut that I didn't want to lose. So I wasn't about to get out of these high class, high quality type companies and move into something more speculative. I was just the opposite. I've got to grow this. I don't want to risk anything in it and have to recreate it, that type of mindset.
Mm.
So I was always income focused. And my parents, my family business that I was not a part of was really based on having 3 or 4 streams of income. He used to take back mortgages from the homes he sold. He'd insure the properties. He'd have rental properties. And this is in addition to the sales, of course. And he even went so far as to have a lumber yard that supplied everything needed by his subcontractors.
Mm.
So he had 4 or 5 streams of income in a vertically integrated type of business. So I was kind of going the same route with the different income streams. And I diversified, and I guess the diversification is almost the same idea as the integration. So I guess that's where I got those thoughts from. But I was never a speculator. I never did it. When I was buying stock, I never bought a NASDAQ company ever. I just never either needed to or wanted to take that kind of risk. I'd rather have, it's just like being a single sitter instead of swinging for the fences.
Yeah. No, that's a really great realization there. So that was your dad that were you saying, or that was a
Yeah, my father had this. He developed real estate in Lake Apacong, New
wow.
Jersey, which is about 45 minutes out of New York City. And first in the 50s, 60s, it was a summer community pretty much.
It's phenomenal.
Um, and then later on, as it developed, the whole area developed and grew, and the lake was discovered more. And the people who had built summer homes 5 years earlier said, "Now we're going to renovate. We're going to add 2 more rooms, 3 bathrooms, and a garage, all this stuff. And now we're going to be permanent residents." So we lived through that whole growth phase with this development.
Yeah, and you witnessed and were first on hands, first party access to a lot of growth that occurred in the American economy. And
Oh,
one
yeah.
one thing that I think is interesting is looking at the appetites of my generation. Like I said, born in '96, pretty much everybody I know has done some form of speculation. Reddit and Robinhood has made, in my perspective, it's probably made speculation more, for sure, more accessible.
Oh,
And
absolutely.
I think it's very valuable what you said, and perhaps that through this podcast, and that's the goal of this podcast, is that people like yourself can be a strong example for, hey, you don't have to go and be
That
a
route,
speculator. You can
right.
build financial independence through long-term smart moves.
We didn't have computers. We didn't even have IRAs when I started. It was all individual. IRAs began with a 1,500 annual deposit. It
Hmm.
was really small. There were no computers. You didn't have any of the resources you have today. I used to stop at in New Jersey, we call them delis. I used to stop at deli, pick up the Wall Street Journal, go to my office, open it up, and I'd have to look at the list of stocks. Have you ever seen the old Standard& and Poor's stock guide?
I have once or twice.
You have?
Mhm.
Yeah, I've got one. Yeah,
Oh,
it's right.
wow.
This is, I think this is the last one,
Hmm.
June 2018.
Sheesh.
And in this thing, S&P listed every security, where it was traded, ticker symbol, market that it was traded in, what its rating was, all that stuff that you now look up online
Right.
was in here. So we could create these universes of securities that were all B plus or better, dividend paying, traded on the New York Stock Exchange, diversified in their product line and things like that. So we could really come up with a quality. They were low PE ratio, debt to equity ratios, the key fundamentals that we focused on. We never focused on the technical side because great to look at the past, but you can't predict the future. And most technical analysts start to try to predict the future with their data. It just doesn't work.
Hmm. Better to have that foundation or to really take people through the process of understanding how they
Yeah,
could begin to take advantage of some of the things you're talking about or use it in their own lives or even to begin to analyze where they're at and where they could potentially go to
it's
surpass.
stuff the stuff you don't get in school. Even as a business major in college, uh, I had some of this, but I didn't get the type of education I gave myself after I started actually running people's money. I wasn't going to take the risk of losing a lot of money for people. That was crazy. And I refused actually back in the dot-com era. I lost clients because I refused to buy them those new issues and stuff like that. I said, I can't do that for you. I've never been a speculator. I don't know why.
So, what is the process of self-analysis that a listener could go through so that they could start to define and craft their path to financial independence?
Oh boy. I think it all starts with education and mindset. I think that if they focus, what's most important to a young person today in their life? It's the amount of income they receive and they're going to earn. I want to earn more money so I can do this and this, so I can get married, so I can have children, so I can send my children. So why not focus on when you have that, you finally have money that you put away or you get an inheritance from your parents or something, or even a gift. Why not invest the same way you run your career? Get more money safer with a well-known high quality company that pays you a dividend, or like I do with closed end funds that are portfolios of high quality companies that pay dividends and they pay you even more. That's the thing. Change your mindset. I think a lot of it is here on the news. When you watch the news and you see what the market's doing, turn
Hmm.
the sound off.
Hmm.
Turn the sound off. Don't listen to what they're saying. Just turn the sound off and see markets up, markets down, whatever's going on. But don't listen to all the hype that goes along with it, that type of thing. I know I did. I used to watch the tape and watch the numbers, but I was never listening to what they were saying because they never agreed with me. It was always the buy signal was the market's going up. You got to get in here now and get some because otherwise you're going to miss the boat. Instead of saying, hey, the market's going up, look at your profits, take some of them, put them away safely, and put a bunch of it away for income production for your future. You'll never hear anybody say that. You might never hear an investment advisor say that. Investment advisor would rather have you sell the ones that aren't going up, maybe save you a couple bucks in taxes. You lose 100, but you pay 25 cents less, $25 less in taxes. That's their mindset. Instead of saying, hey, this company's in an industry that right now is unpopular and it's down. We don't want to sell that. We want to add to that position. It's a good quality company. It's just not popular in the marketplace. These are the types of things you got to realize. And the other thing I think, which I find very useful, and I really see a lot of light bulbs going off when I'm talking to people, and I start talking about them thinking about their portfolio like a business of its own, like even like a department store where all these different securities they own are high quality merchandise on the shelves of their store. And they've got hundreds of different pieces of merchandise and they've set a markup. They've set a profit markup on them and they're going to sell it when somebody comes in to buy it. I'm not going to say, I can't sell that to you because I know the price is going up tomorrow and I can get more money from you. They're going to say in the store, thank you for giving me that profit on this piece of merchandise. I'll get another piece of merchandise. I'll put it there and I'll do it again. Or I'll buy more of the same type of thing and I'll put it there again and do it. And that's really what you're doing with your portfolio. Your focus in the media is to appreciate how our capitalistic type of economy, which I am in full favor of, generates these wonderful profits and makes people so wealthy. And how are they doing it? Are they doing it by having the value of their inventory go up? No, they're selling stuff, getting the profits, and reinvesting it in something else or more of the same thing. And yet, When we, as investors, ask them to manage our money, they want us to just hold on to those things and not sell them and just let the market price keep going up and up. We're investing in capitalism, but you can't go about your investing as a capitalist. You have to be a buy and holder and stuff like that. So it's just it's going to be hard to change that mindset.
That's really the big
I don't
lift.
have enough time left.
That's truly the big lift. I was talking to a friend a few days ago, and I'm sure you've heard a million people say this. Hey, if I won the lottery, I would do this thing and that thing and all that. My thought to him was, you would be surprised at how little consistent income you need to actually feel way better than you think you would. That stability, that consistency, this lottery mindset that we have. We think we need to go win the big lottery, have hundreds of millions of dollars just to feel this kind of like peace of mind, relaxation, security, what have you. But if you just had 2x, 3x your normal income coming in on a recurring basis, you'd probably feel very good.
Oh
You'd have
yeah.
to go fish or do the thing you want to do, and you'd be like, wow, life is actually, I don't need that huge thing, you
Yeah,
know?
and income focus gives you the added flexibility of, like with me, not commuting in New York anymore and starting a whole new business. In that in that time where I was running this business, I didn't have to grow anything other than getting more clients, but I was developing that portfolio. And it was when I said, okay, I'm going to take your offer, I was making enough money. They don't give it to you all at once. They give it to you like almost 50% this year, and then next year, maybe the rest of it, 18 months, so on. And if you don't have enough money coming in to keep your lifestyle the same after you said, okay, the job's gone, I'm not getting paid anymore, then you're in effect going to be paying your lifestyle with that money they just gave you instead of putting it away. In my case, since I've already had that investment income coming in, I just added it to the investment pot. I didn't have to spend any of it. And that's the second big thing it does for you. It gets you to the point where if you happen to get passed up for a job that you thought you should have and you can't stand working for that boss who used to be your buddy and now he's your boss, you can go get another job because you got enough money coming in outside the job to go look. That's the type of thing an income independence focus gives you that a market value focus does not give you.
Yeah, I think we as a society drastically undervalue the potency of just having financial security or really that consistent level of income to be able
Yeah.
to think creatively and innovate and see different opportunities. If we're so focused on you need to maintain and you're trying to get that big boom that just changes everything versus the incremental gain, and then you're able to again use your mind and tap into some of those bigger things, but you just think a lot clearer when you have the security and the foundation.
And once you get to a certain point, you could have the luxury of maybe doing a miniature speculation somewhere just because. I've rarely found it necessary. I have to admit, I've done it once or twice. One of my clients was doing this thing with an ETF that is three times the Dow or three times the S&P. There are four of them, one for each of the four main indices. And he was doing this thing where every time the market would really tank, he'd buy actually a significant amount of money in each. He's a pretty wealthy guy. And it would go up and he would hold it and hold it, hold. And I'm going to hold it until it's a year because I don't want to pay the taxes. I want to pay 15%, whatever it is, on long-term capital gains. And I said, there's just no way that I am going to hold on to something like that and just watch it go up and not take the profits. So my wife decided that she wanted to take this type of security in her IRA, just a small amount of money, and try it out. And I told her that's okay, but we have to set a 10% target. And we've done that in the last three or four times the market's gone down enough to take that risk. And we've done it. And it's been successful. And you can see why somebody would say, hey, this is going to work. And they start doing it. They may start doing it in smaller amounts and trying to do this type of thing with and I would never think of doing that. The market has to really be where everybody's pulling their hair out before I'd even attempt it.
Hmm.
Yeah, yeah, and I can see why people can get caught up in that thing. And all of a sudden they have 14 of these different speculations going on, and then others will start getting intrigued with options and stuff like that, and then they have
Yep.
that going on. I've never done an option in my life either. So I can understand there's so many distractions, and today with the internet, there's so many people in your ear all the time with new thoughts and ideas, and you have access and you push a button, you can buy anything you want. For me, that's been a great thing because now I can do my trades after the market closes. I'm ready for the next day within an hour and I'm up at dinner. But there's a lot out there. There's a lot of stuff pulling you away from that path, and you really got to develop a set of blinders.
I think if there's one trait about you that's pretty freaking phenomenal is your ability just to lock in because especially nowadays there's you use the word influencing and the thoughts and the ideas you can scroll most people do 10, 15, 20 minutes sometimes longer and you're going to hear 150 different opinions of different thoughts if you're tapped in whatever part of the algorithm you're tapped into whether it's fitness or business or investing you're going to get 10 different perspectives that probably contradict one another and it's so difficult to just say, let me stick to this one thing that I do, that what you believe in, what you're working
Mm,
on. But you mentioned some of the early formative years, and I think that was really unique to hear that you started with that nut that you didn't want to lose, and that became a very core part of your psychology and the way you approach the market. Whereas, and I'm just again speaking from personal experience, we see my generation's about entrepreneurs that break the mold and become extremely rich and create tons of value and securities. You get on the train that blows up and you 10x in 3 days and all these sort of things. We're like constantly trying to find that. So how can we first off find the right path for ourselves? Maybe that's a little bit of the best of both worlds, perhaps, but also just stick to what I think to put a term to it is reverse engineer. Because ultimately, let's say you're going to have somebody that wants to achieve a certain lifestyle goal or way of living, it seems like you'd want to reverse engineer, right? You'd say you need this much in assets and these kind of things. And so how can we find that point for ourselves and also stick to that path once we've identified it? What are some of the things that you've done?
but just in this community that we now have that has come out of the book, we call it the RMS income investing community. The questions and the stories that come out of that, and when you talk about people who have just started, and then other people that have been doing it for a year now, the calmness of the people that have seen the income coming in for several months and are now seeing growing at quarter over quarter, they're not even their tone of voice, they're calm. They're talking about the stock market and they're calm and easy and not worried and stuff. You got to start seeing, you got to start saying what you were saying, that you got to come up to a point. I need to have X amount of income to feel independent,
Hmm.
to feel that it's not going to bother me. Nothing can hurt me right now. I've got enough income. I can, if I choose to, I can change jobs. I can change careers. I can not work overtime and write a book instead. You know, I can go on that vacation because I just set aside a couple months income. I can pay for it. Those are the types of thoughts you want to have in your life. You know, that you can do whatever you want to do,
Right.
basically.
They
You
give you
know,
something to dream for. I have a good friend who works, he's a civil engineer. He has a nice house, a little car, and everything, and he makes probably just more than enough, we'll say. And that's level one that everyone wants to get to. Like you got your things set up, you got the assets in the case of a house and a car. Whether they're assets or not, that's a totally different book. It's literally a different book.
different book.
Yeah. But when you achieve that level, he's starting to think about what the stuff that you're talking about. And
Yeah.
people, when you can really connect the dot that it is just having that security stability that will allow you to be creative, write a book, do those things that can take you to that next level.
Yeah. There's a difficulty for today's 50-year-olds, let's say. Most of their money winds up being in that 401k pot and not enough in the IRA. And I guess They're mutually exclusive. Once you're putting enough into the 401k, you're not eligible for the IRA anymore or something like that. But the thing is that you don't get your hands on it soon enough. And when you do, there's so many different approaches coming at you as to how to invest it after you take it out of the 401k.
Mm.
So you have to really figure out that I've got to train myself now on how to put this 401k into an income focused environment after I get my hands on it. I need to do that myself because the investment community is focused on the same things that the 401k community is in, and that's growth of market value. So I have to find a way that I can transfer from here, put it in here, and start moving it into income purpose investments. So I can take that $500,000 401k, and instead of having a nice chunk of money that's paying 2% income, I'll know how to take it from a 2% to a 10% because I've already done it with this other small portfolio I'm developing on my own. So that I think that's a big clue, a big suggestion, an idea for that generation that's 10, even 20 years from retirement.
Mm.
Don't just have it all in that somebody else managing, market value, growth focused. Get yourself a separate income focused thing going in addition to that. And most people today in the jobs that are developing that type of 401k are making enough money to put a little bit away. Instead of building a swimming pool in the backyard this year, put that money away and then build the swimming pool with your next year's bonus, not this year's. Get that started.
Hmm. You mentioned the word calmness and the peace of mind and the way that people are communicating, being more relaxed. So, what over the course of your life have been the greatest sources of joy? You mentioned our first conversation, you spent a lot of time with your wife, right? What moments or things? Was it selling the business? Was it the realizations? Was it the learning? Was it the creativity? What really have been the greatest sources of joy for you?
Oh, I don't know. Geez. I guess getting where I felt that I was income independent. My biggest joys have really been personal, not financial. I never had any financial anxiety. Chose my parents well, so to speak. I didn't have that as a young person, and I developed the sense of how to make my own money in my investment portfolio. I actually did better in my investment portfolio at first than I did in my work life. So that wasn't really a problem. So my biggest joys have been traveling the world with my wife
Mm.
and taking care of our families. That's really where I get the best pleasures from.
Mm.
The pleasure of a hole in one. I've been playing golf for 40 years and I haven't had one. I've had close, but no cigars. I've had eagles. I've had good scores, but I've still never had that one lousy hole in one.
The things you
But
have and the things you're after. We all
yeah,
have.
but I need to have a par three course next door so I can play 18 par threes,
Mm.
and maybe that'll make it easier for me to get a hole in one.
Exactly. Increase the probability.
But no, my joys have not been the financial type. It's my business is finance. That's so I guess I shouldn't say that. I was pretty pleased that I managed other people's money for 45 years and never had a complaint,
Mm.
never had a lawsuit, never had a real complaint of any fire. I've had people leave me, certainly, but that was because I wouldn't buy that speculative new issue for them and things like that. But yeah, we never had a complaint.
Mm. And yeah, the reason I asked that is because as someone, let's say my listeners are entrepreneurs, investors, probably around my age up to on average maybe 45, 50-ish. You get a nice little base there. But the point is if someone I'm 28 looking forward, you think it's you build the business and you exit it. You think it's these far off that you get the retirement home or not the vacation home,
Man.
things like that. So it's like you're saying like you're projecting at my age, you're saying, okay, this is where my joy is going to come from. But you've had the ability to have and the experience to have those successes and be able to look back on it now and go, you know what, actually, those things were fantastic, but they're just only a portion of my life. Versus when you're young, it's that's everything. Like you
Yeah,
want that success.
right.
It's so
Yeah.
important to you.
Yeah. It's good you got me to think of those things. That's interesting.
Hmm.
Yeah, I've had it pretty good.
If you want to change a mindset, you have to, like we're talking about, for someone to change from this kind of speculative mindset, quick growth, what's the market value, to, hey, I think that security, stability, independence,
Income.
freedom, in income, and those kind of things, and building myself up over time can be maybe that's a valuable path.
Oh
You
yeah.
have
I
to
mean,
create a new, exciting future. You have to create perhaps even that hole in one that's a little bit the mythical
if,
beast.
yeah, if you listen to some of the people in the community or even in the Facebook groups that I run, and you hear how literally they say it's really changed their life. That now they're getting three, four, five times the income they were getting from their portfolio, the same portfolio, as they were before. It just makes that much difference because the stock market, unfortunately, it goes up and it goes up fast when it goes up, but there's never been a rally that hasn't lost it to a correction. Not necessarily all of it, but enough of it that if that's all you've got is that market value, you can't help but panic when you have a dot-com bubble burst or when you have even the 9/11 momentary market closure and downturn at that time. It didn't last a long time. COVID was 2 months, but people were selling at the bottom. They always sell at the bottom. I don't know why. So if your closed-end fund portfolio in 2020 was generating 7% when COVID hit and went all the way down as much as the stock market did, it was still generating the same amount of income. 2 months later, when the market started to rise, you didn't lose a thing. The income kept coming in. My biggest complaint about that whole little correction was that it only lasted 2 months. So I only had 2 months of distributions to reinvest at those low prices. But the idea that income, when you have a regular full-time job that's good, this is like getting almost 100% bonus every year from your portfolio in income. And it's just not a thing that gets people excited because it's just not sexy like seeing the market go up and seeing your Nvidia hit a new high and
Moving
knowing that it's going to be another
incredibly quickly.
15 years before Nvidia ever pays you a dividend. If it's still around 15 years from now. Tesla's never paid a dividend. Microsoft didn't pay a dividend for 20 years or more from the time it got hot. It's just income is not king to those who don't appreciate it, but those who don't think about it a whole lot. And on Wall Street, income focused securities like the closed end funds, I have a list of 250 of them. The highest priced closed end fund that I own is less than $50 a share,
Hmm.
and it's been around 20 years. You're not going to have the type of growth in market value of these particular stocks because they're trusts and they pay out 95% of their earnings to their shareholders. If any of the major corporations paid as much as 10% of their after-tax earnings to their shareholders, think how much more would be able to, think how much bigger the economy would be just from people spending it. Anyway, it's interesting to think about it. It's hard for me to understand why people don't discover that they can create much more income sooner. They're not coached on it by primary advisors, but eventually I'm hoping they will be.
Hmm. What's your vision then looking forward? How?
Oh, yeah, the vision is to create a demand from the average investor, not for the securities that we own, but a demand of their advisors that if you're going to charge me 1.5% or more to manage my money, then I want you to make that much at least in profits. If you expect me to have to pay 4% of my market value each year when I retire to maintain my lifestyle, then I expect my portfolio to earn me a whole lot more than 4%. If I'm going to have to spend 4%, it's easy. You don't even have to use closed-end funds. You could almost do that with dividend stocks, a couple REITs and a couple BDCs. So those are the types of things. I want my advisor to take advantage of profits when they're there and not just hold on to things. And I want him to get out of the myth of saying that he's saving me money by taking losses. You don't lose $1,000 in productive capital that's producing 10%, if you sell that at $1,000 loss to save taxes, you're taking $1,000 hit in income productive capital to save me $300 in taxes. That doesn't make any sense, but that's what they do.
Mm.
There's just so many things that are done. The dollar cost averaging thing, the drip investing, all these things that are designed to get that money back in there to build the AUM instead of using it to selectively create more income. It's a way of running investment portfolio that I think is really counterproductive.
What other myths or preconceptions exist?
What other ones?
Yeah, that maybe prevent or preclude people from being more aware and taking more.
I think the idea that any of these spokespeople on the internet, any of these market commentators have any ability whatever to predict the future, they,
Hmm.
they don't. And one of the things as a professional you learn, but you have to live by is that you don't recommend individual stocks to somebody. You don't get paid to recommend individual stocks to somebody and then walk away. You recommend an approach. You recommend what they should research. You recommend what they should look for in a security. But you don't go out and say, hey, buy XYZ because I know it's going up. That's totally non-professional, but it's totally done. And then you have groups where they're plugging and pushing different symbols at these
Hmm.
people, unsuspecting that they know something about the future, and nobody knows the future. It's a world that needs a smack up alongside the head, and I'm certainly not big enough to do that. But what I would like to see in the future is a more income focused. I've grown my portfolio significantly by through reinvestment of income and profit taking while spending pretty much all I want to spend. And there's no reason why other people can't do that.
What percent of the market would you say, just even if you were maybe you know the number or you don't, if you were to estimate what percent of people you take advantage of these kind of things, and what would happen if 10 times more, maybe it was 30%,
Oh,
started taking
man.
advantage, what would the market really look like? I'm,
Oh, wow. What a
yeah.
difference it would be. I would say that less than 25% of the professional advisory people in this country have even heard of closed-end funds.
Hmm.
I would say that at least that number don't focus on income when creating portfolios for people because most of their bosses and the big companies are looking to put everybody into model portfolios. Because with a model portfolio, every broker you have now becomes a salesman, and the salesman is getting his share of those model portfolio fees, but they're only being managed by one guy for each model. Maybe each guy may even manage a couple models. So you're buying this thing that your broker might even tell you that he's making the selections. I've had clients who come to me model portfolios and said that his broker, hey, he's doing all the decision making and he's only getting a half a percentage point. Why would I pay you a point and a half? I said, let me take a look at that portfolio a little closer because there's no way he's only getting 50 basis points. So it's a myth. It's almost a scam in my mind. It's a big thing. If we had an income focused community, if the professional investors out there encouraged people to invest for income, all of a sudden the corporate world would start paying more dividends. You wouldn't have a Tesla whose president is worth $447 billion be able to not pay one penny to any of their shareholders. Those profits for Tesla to get into any portfolio that I ever manage, that's got to pay a dividend, or else I'm not investing in it. And if the rest of the investment world would say, no, we're not going to buy a stock that doesn't pay a dividend, you would have all those companies paying dividends. And you would have that much money getting out there into the hands of all the investors, and it could be spent.
Right.
It would be great for the tourism industry. And I don't know that we need that.
Hmm.
Tourism really do it pretty well all by itself. But
Right.
But it would be a different world, obviously.
Yeah, it seems, and I've never thought about this. There's always, and I had somebody on the podcast last week, and we had a deep conversation about income, or let's say wealth distribution. And we all know that can be politically based in some ways, and there's potentially different approaches, taxation and what have you.
Oh.
But it would seem that, interestingly enough, that if more of those kind of companies paid dividends, then that would be a capitalistic intervention that would affect wealth redistribution and also stimulate the economy because you're
Oh.
freeing up that cash. Obviously, the trade-off is, and I'm curious to your thought on this, because the whole thing is the day a company starts paying a dividend, it stops being aggressively focused on growth. That's
It
or
may be, but when you look at most growth companies, you don't see them. I ran my company when I first started. It was probably 5 or 6 years before I took a salary. You don't see corporate America in its infancy, in a business's infancy, when it goes public initially or whatever. You don't see the CEOs having no salary. You don't see the CEOs building their companies without building themselves their own income first. There's just no way somebody should be paid $100 million to be the boss of a big company. I just don't see it. And true, the company, if it's, yeah, he should make more money than the rest of the people, certainly. But if the janitors stop cleaning up, there's going to be a problem for the employees doing their jobs and so on. The people at the bottom end are just as in in the process of creating that profit and that wealth, and they deserve a piece of it, just like the owners of the company. The shareholders are the owners of this company. If you ask any shareholder if he thinks that the CEO should be breaking in $100 million salary, they're not going to tell you yes. They're going to say, hell no, we should have more dividends.
Tesla's an interesting case in the sense of Elon does not take a salary, but he gets the performance-based incentive packages which are designed to, of course, achieve like ridiculous goals, right? There was the $87 billion payout that
And he
was
doesn't, which he
tested,
doesn't pay any taxes on probably either.
of course, because,
I don't really know.
and I don't know if a lot of people know this, but this is something that I learned because I was always curious about. So Elon takes no salary, and you're like, he doesn't not have money. So
Right.
what does he do? They take out loans against the value of their stock, and then they have liquidity, and they're able to get the upside. So it's not like they're not making money. But I think it's super important for people
Well,
to know that's actually how they do it.
I was just on a podcast the other day with this guy, and he was saying something about setting up a trust or something that buys insurance, and then you borrow on the
Yeah.
insurance and just don't pay back. You put all your money in this trust. The trust buys insurance. You borrow on in the insurance,
Yep.
but you don't pay the interest.
Exactly. Yeah, that was
And
that was me and you. I
yeah,
think it,
you and I talking.
yeah, you and I in our first conversation.
Yeah, I mean that's like great for him, but no taxes are get paid, and yeah, I don't know. I don't know if I really like it. It makes sense in our tax code because you can
Exactly.
get away with it. But there are so many ways that people can avoid taxes. I would like to see. Have you ever heard of the fair tax legislation that was in
I've
Congress?
heard of it.
It's probably still in Congress.
I've heard of it, but
It was like an idea that there would be like a flat tax on all income, and that's regardless of where it came from. And there would be
yes.
no deductions. And that would be enough to take care, it would produce as much income as the current system is producing, maybe more.
Hmm.
There's
I'm
a
definitely
little more to it than that. But that's what I'd like to see. Of course, then all these poor accountants would have no jobs. And
no, I
they would
no IRS.
yeah, the IRS would get rid of it. There's no simple solutions to anything,
Mm.
but there is a simple solution to investing. And that's the idea of getting an income focus. So back to get us back on topic, because I'm not smart enough to change the world, but I can change this little bit of it.
Exactly. Yeah, that's what it's all about, impacting what we can. The book that I was talking that you brought up, or the concept, I think the book was called "What Would the Rockefellers Do?"
Oh, is that what it is?
Yeah, if anyone's interested in learning about that. But of course, you have your book.
Yeah, one of the things that as a professional investor from the earliest time on, from when I got out of school, And when I started investing on my own, I've never picked up an investment book since then
Hmm.
because what I was doing was working so well. If it ain't broke, don't fix it. So I never looked for other ideas and ways because mine was working. So I didn't confuse the issue. And I know a lot of people, even in the community, I hear about people who have picked up Steve Bavaria's book, which is also on closed-end funds. And I've seen some portfolios that people designed using his newsletter and stuff like that. But I've never actually read it, but I know how it differs from my approach because of what I've seen and what I've heard. And I think it's great that he really got people aware of closed-end funds like he did. His book was much more popular than my first book, the brainwashing book, where I first introduced that department store concept of
Hmm.
of trading, but I did it with stocks and with closed-end funds. But yeah, I think there's certainly some good books out there. But once you're running, and particularly when you start running other people's money and you're doing it in a particular way, you don't want to mess with it. You just want it to be
Yeah,
steady, consistent, dependable. That's what I'm all.
it goes back to that topic of having a path and sticking to it. And it would seem that there's the balance of novelty and familiarity.
Mm,
It's that your bias, just to use the word, your bias is towards that familiarity.
I
And
am.
people can, but it's a very important thing that people can learn. And hey, you don't always have to be focused on novelty. What is the next new thing? I have to try this strategy. Add that strategy to this strategy.
Oh, I
And
know. There's
it,
so many strategies
yeah,
too.
across domains, like even in health, you could, a friend and I actually, this was about right when COVID hit. We were working out a lot at the time before the gyms closed. But then COVID hit and the gyms closed, and we're like, how are we going to maintain that level of fitness? We're working out, doing cardio, doing weights once or twice a day, very good shape. And we said, all we have is we had a little condo area, just this little condo we were living in. And what we ended up doing was just fasting and doing push ups.
Doing
And we ended up
push-ups.
increasing our level of fitness and getting extremely in shape just by fasting. We were eating 1 to 2 meals a day and doing push-ups. And we did about 300 or so push-ups a day. So
Yeah, I don't do quite that many, but I do push-ups every day.
there you go. Yeah, we ended up doing, I think it was 40,000 over the course of 6 months after that.
Oh,
Yeah, we
wow.
just started doing a lot. But the point is, like, we reduced it down. There's so many people like, I need to take this drink and that supplement, and I need to go to my spin class, and I need to do this thing, and I need to do the new yoga class. And it's like, if you really get down to it, a lot of things can be reduced down to the very core fundamental and say, if I just eat really well and do some form of consistent exercise on a daily basis, I will get healthier. So going back to your point where maybe at some point you learned that if I just manage the money in the appropriate way and I just increase by helping more people become aware of this, I'll naturally increase and chart that path to the goals that you had and have ahead of you in your life. Does that sound
Right.
accurate, or were there other kind of
Yeah,
premonitions that occurred along?
I think the main reason that I do this podcasting thing is because I want to make more people aware of income-focused investing. Because sure, it benefits me too. We created them for closed-end funds. The prices are going to be more stable. They're going to probably rise. And they're made, some of the bigger companies will start producing them because now you have 46, 47 different companies that produce managed closed-end funds, but there could be so much more money because it's the same types of securities are available. It's still in the stock market, still in the bond market. There'd just be more of them. But yeah, I want that to get spread around. I think people need that, but I'm going to have to get all the people that I contact to get as serious about it as I do for that to happen. And that's a slow process.
Were there examples of that across your career where you had someone, what, I just want my maximize my return, profit optimization versus security maximization in essence? Because as an entrepreneur, I feel like I'm like that the profit optimization. I'm trying to engineer more profits and try to get that breakthrough value, right? How that mind just functions versus security and stability maximization, where you're on a clear path. Were there examples in your career where you
Well,
got somebody and you got them to see
I had
they
people
were
who didn't
convinced?
like my ideas with regard to how I was managing their money, and they left because I wasn't just trying to build. the market value. I was taking profits, and I said, and people would say, "But why did you take the profit on that thing? It was going up and up." And I said, "That's why I took the profit on it. But I'm going to buy it again eventually, and I'll do it again." But many people don't see that and are not happy with it. What you just said, there's your business and growing it. That's clear to most people.
Mm.
But they don't realize is that this portfolio, though, they
Yeah.
have here can be looked at the same way.
Mm.
It's a business. Think of the, instead of the department store, think of all those little closed-end funds as your employees. Only these employees are different. They pay you to be employees there.
Mm.
They're paying you 10%. And occasionally they give you a bonus because they become a position where you can take a profit on that guy. In the sense, you can sell him and then you can buy him back again, the same with at the price he was working at before, or a little higher. He's going to keep paying you, and he's going to keep providing, and you're going to grow that business. It's just another business. That's what it is to me.
Mm.
That portfolio of mine is just a business that I've developed, and my goal for that business is to create as much money as I need to live the life that my wife and I enjoy. And that we're going to be going this year, we're going to spend almost a month in Europe on a Viking cruise with a beginning extension and an end extension. And we're going to spend about 3 weeks going from Dubai to India, back to Dubai and back. We're going to be traveling 2, 3 month trips, and we don't fly in the back of the bus. That's what I wanted. That's what my business is creating, is the wherewithal to do that. Yes, dear, we'll do that. And not
Mhm.
say, I don't know. That's for people my age really would love to be. And I can help them get there. I've seen people with 8-digit portfolios, low 8 to 10, 12 million, and they're making three or 400,000 a year on that. They should be making 1.5 million a year that they can spend instead of such a paltry amount. It's crazy to me. But hey,
It's a great realization though as well. It's like after the money's made, there's a business that occurs after that. Everyone hears about getting your money to work for you, and it's not the end. Once it's in that portfolio, it's going to work. It can work for you as well.
like when it's working while it's growing, but once it gets out of that place where it's growing, that 401k or wherever, where that market value, you got to make it then grow by itself, whether the market goes up or not. That's the challenge. That thing's got to grow no matter what happens with the market, what happens with the interest rates. It's got to grow because you're generating enough income that no matter how much you spend, you still have a little bit left over to put back in there and make the income continue to grow. That's the thing. So I used to tell people, if you leave at least 30% of what I make for you in there, I'll grow your income. Otherwise, I'll have a problem.
So developing that North Star, you mentioned your North Star was being able to just go wherever your wife wanted to go or do what you wanted to do and just have that income.
That's it. Just know that you can. You don't have to say, well, I don't know. It's pretty expensive to get planes these days. But you want to be in a position where, yeah, you can do what you want to do. You can, even if it's helping your kids
Hmm.
or even your friends, you know,
Know that you can.
or even a stranger. You can do whatever you want to do. That's the important thing.
Know that you can. That's a good
Yeah,
statement to leave people with.
know that you can do that. Yeah, I think that's where it is for me.
And then just to, as a closing thought, when it comes to discipline and things of that nature, like what is your attitude towards discipline? And
Oh, it's all about discipline, really. It's so easy, and so many people, I hear this all the time in the conversations in the community. Oh, this one's really been doing good. And that means that he's got a profit there that he hasn't taken yet because he thinks he knows that this is better than the other ones. It's going to just keep going up. That's the type of thing. So the discipline, that thing hits a 5% profit, you sell it, period. You got another 187 different closed-end funds you can buy and they're paying just as much income, and they have the same exact capabilities of going up in price as the one you just sold.
Mm,
Not one is not necessarily better than the other. We'll all have ones that we have better experiences with over the time, but that's just a matter of when you bought them and when you sold them before and so forth. But every one of them is sell. Everything in the store is for sale all the time.
mm.
Everything.
You know, that Warren Buffett maxim, rule number one, don't lose money. And rule number two, don't forget rule number one.
And when or when not to lose. What makes something a loser? In the normal Wall Street jargon, it's something that didn't go up in price. When you become an income investor, it's a whatever it is, a stock, a closed-end fund, a ETF. It's a security that's distribution starts to go down. And all of a sudden, it's not paying you 6% anymore. That's when it becomes a loser. It's no longer providing the income that my other 239 are paying. So I'm going to get rid of it. So when do you get rid of a loser? You don't get rid of a loser at the bottom of a stock market. You get rid of a loser at the top.
Mm,
When everything is up, it still's not up. And it's still not paying you 6%. Then you sell it. That's what I do. When my market value, I only use market value for three things.
mm,
Three things. The price I'm going to buy something at, the price I'm going to sell something at, determining when I'm at the highest market value my portfolio's ever been, so that I can go look and see if there's anything that I think is a loser. And that's it. Other than that, I don't care what my market value is month to month, because and I don't know if working capital is the term that means what you've invested in all the securities in your portfolio. And if you think about it, as long as you're bringing in more money than you're taking out, that that working capital total is going to grow. As long
mm.
as you're not taking money out or losing money more than you're making in profits, it's going to grow. That's the number I want the working capital to grow every quarter, the distribution income to grow every quarter. And there's another thing that all the statements give you now, Fidelity, Schwab, whatever, every one of them, every month gives you this figure. It says, this is your projected income for the next 12 months. And I want to see that growing every quarter. Those are the only three numbers to look at. And I keep a spreadsheet for each of my accounts. I see people who have spreadsheets that go from here to left field with different columns and categories and information and so on. And I say to those people when I coach them, I say, 2 years from when you and I meet again, your spreadsheet is going to be this one. I show mine.
Hey,
This is all you're going to look at.
that's a great point. Focusing on what matters, not just everything that there is to focus on.
Yeah, you can drive yourself nuts. There's so much data.
It's like that becomes an addiction for a lot of people.
I
Think
know.
that they need more and more. It's intertwined the two there. That
Yeah.
research process is I need the next one, and then because it's
Yeah, and to
fueled.
to reassure yourself that you're on the right path, you need all this confirmation. The addiction that I found that people have after they use my process for a while is the same addiction that I have, and that's to profit taking.
Mm,
We start taking smaller and smaller profits because if all we have is small profits, that means everything else is down, and it's an opportunity to add to it, to increase our yield, to increase our income. And that's what happens over time. So,
embracing the value of that incremental growth in your life is
yeah,
a key takeaway for people here. Embrace the consistency, embrace what you can understand, and always need to
right.
face what you
Just
don't understand, and the next
and
thing, and what might be, and fear of this, anxiety of that.
to predict I said you can't predict, but the predictability of your income is a really satisfying thing. You don't lose sleep nights if you know that every month you're going to get X amount of money and that every quarter that's going to be X plus a little bit more. You don't lose sleep about, am I going to be okay? Oh my God, the taxes on the house are due. You're not going to worry about stuff like that anymore.
Mm,
Probably add years to your life.
exactly. Said. So for those who want to, learn more about what you're doing and reach out to you, how can they get in contact?
The best way is go through the book because all my contact information is in there, and you'll start to be thinking about this what mindset change is and what it's going to cost you intellectually and emotionally to get there. My website is theincomecoach.net, and there's the community, the RMS Income Investing Community on the school platform.
Hmm.
And I think if you just go to school, you can look up the platform there. I'm not going to give you a link. I don't know what it is. So.
We will put those in the description for people so that they can easily find you. Stephen, it's been great to have you here on the podcast. And hopefully, for a lot of people, you can now realize that there's potentially another path. You don't just need to chase the biggest return. You don't just need to chase the speculation or the stories and the things that generations like myself have seen. You need to hit it big to be happy and to have peace of mind and calm. There are easier ways to do it, perhaps. So, for those that are intrigued, go ahead and reach out to Steve and get his book. And Steve, thank you for being on the podcast.
You're welcome. It was great. Enjoyed it.
Hey everyone, thank you for watching this episode of Titans Up today. What did you learn from it? Make sure to drop a comment below with your most valuable insight so that other people can engage in the conversation around what this speaker brought to the table. And then on another front, make sure to subscribe so that every time we drop a new episode, you will be notified. And that way you can keep fueling your dreams and your brain with fresh insights, which can help you along your journey and along your path to your goals. So thank you so much again, and I look forward to seeing you in the next interview.